Hey guys, Sam here. We're midday, November 13th on a Monday. I had a request to look at Litecoin, and I thought we'd look at it both relative to the dollar as well as to Bitcoin. Now, one of the things I just thought I would show you, I kind of make assumptions that you all know this, but if not, many of us will keep multiple accounts. It's fairly easy to move Bitcoin or dollars around now between exchanges. So, and it's easy to open an account. So I keep, probably at least half a dozen different crypto accounts open at different exchanges, and I'm always curious to see where the volume is. So if I'm looking at trading something, whether it's to the dollar or Bitcoin, I want to see where all the volume's coming from. So one of the things that you can do is go over here to Coin Market Cap, and many of you may know this, but just in case some of you don't, when you first bring it up, you're going to get all the basics here, but you can go over to markets and see where it's trading, and then you can look at the volume over the last 24 hours. And I always do this if I'm considering taking a trade, because I've got multiple accounts and I want to look at where am I getting the most volume, and is there a big volume difference from one exchange to the next. So as we, this is interesting. So as we've been seeing with Bitcoin Cash, where all this buying is coming from Korea, we're seeing the same thing here in Litecoin. So look here, this is 64 million just in the last 24 hours coming from Korea through BitHum, and that's is a point of interest, right? So it's tracking with what's happening with Bitcoin Cash. Number two in volume is GDAX, or as it would relate to what the data you would see on TradingView, that would be Coinbase, because they own GDAX. So here's 41 million. Now, if I go down to the next place where I'd be looking at trading against the dollar, well, here it is on Poloniex, right? And you're going against the dollar tether there. Well, that's at 5 million. So the difference between GDAX and Poloniex, that's 30, almost 36 million difference in volume, right? So that makes me want to look at it relative to GDAX or Coinbase and see what that chart looks like. And since I can trade it there, it makes me want to review and analyze the technicals off of that chart. So let's go take a look at it. Let's see where I've got it. Here it is. Okay, so this is Litecoin to the dollar on a 4-hour with the exchange data from Coinbase, GDAX, same thing. All right, so this has been a really frustrating market to trade because we've just been stuck between 250s. So if here was the big correction, right? Here was the big Chinese FUD correction. So if I go from high to low, here's my 50. Here's my 618, right? And even despite what looked promising there as a potential move out of this range, we've just fallen back between it. Now, if I do the same thing and I pull from my low to my high through this time period, well, then here's my 50 there. So I'm just stuck between 250s. So I'm going to take this off just because it's getting kind of convoluted there. So we have those marked. This has been our range. We're just stuck between it. And what we're looking for is some sort of impulsive move out of this range to get a new trend started. Now, keeping in mind that we are, from this high to low, all of this activity in here, we are still internal to that move from high to low. Now, moving this direction, here's our current high. From this low to this high, we're internal there. So we're stuck in this range. And we have another possibility here for an impulsive move to start that would break us out of this range. Right? We still got to go up and challenge these highs, and we got to get through the 618 and the 786 from this swing high to low. But right now, it looks like we may have something impulsive that's started. So let's go down to the 1 hour and see if we can get a handle on it. So does it play? Do we have good structure here from an Elliott perspective? Well, we get here's our one wave, right? So we get is it diagonal? Yeah, so you'd have a leading diagonal here for our 1. There's our 2. We get nice subdivision here into a 3, 4, 5 to give us our 3 high. And then coming back down, now we've gone into an ABC. And so yet again, we go into a diagonal because we have the overlap here of the 1. So we're in a diagonal, which so why is that meaningful? Well, we know that can only be found in one wave or an A wave. And it changes the projections that we use. So in a diagonal, we're going to project, our alternate price projections are going to come from the low here, the start of the 5-wave structure, up to the 3 high. And we're going to project from that. But of course, we're also going to keep our algo targets up here. So you can see from the 2 low here, I move this over, from the 2 low up to the 3, we're trying to track the 4. And we've gone to and through that 1 high. So we're only thing left here is a diagonal, but it looks to me like we're getting something similar to what we've been seeing across crypto, which are these truncated C waves, because we can get here, we can get a 5-wave sequence down. So this likely is an A wave. So there's the A. Then we get a 3-wave B, and so potentially we've come down and put in a C. Now let me change that color, and we'll draw it up. So we are not in a traditional impulse because of this overlap, but we have this. Let me put the wave on so you can see, because we've just been seeing this over and over again in crypto, right? So we're getting the C wave potentially, right? We don't know for sure, but we've had a fairly good move off of this. We're getting a C wave here above the A wave. So if you were just to put a trend line on it, and this is, we saw this in Bitcoin Cash, and we've seen it across crypto. We're seeing this kind of triangular movement in the correction. So if that holds as a 4, then what do we have here? Well, we're looking for 5-wave subdivision here to give us an impulsive 1 of 5. Do you see that? Right. So if we're looking at the Elliott targets, and we work from our alternate price projection, as I call it. So we'd go we'd go from our low to our 3, projecting from our 4. Okay, so that gives us the 618. Here's the 100%. Right, so both of these reasonable targets. Now we mix in the algo target, which is suspect now, given that we've gone to and through the 61865 window. So that being the case, if I pull this back now and go from my low here, do I get any better? Well, yeah, I do. So now even I've had a very slight wick through there, but that still gives me some sense of confidence that this is a reasonable target. So I get a big range here for targets. So if indeed I'm going to go into some sort of 5-wave structure, and I'm not really there yet. Right now I've got I'd like to see one more leg up to give me this potential. Let me put that in a higher degree. Let's go there. So if you open it up here, even on the hourly, you can see I've got kind of a little 1-2. I need one more push up to give me a diagonal. It could be impulsive. I could get one more leg up here because we haven't taken out this. So I potentially get a 5-wave sequence. I got to break this high. Then I have the possibility for a 1-wave to be in, and the next trade is off of that. Off of potential 2 of the 5th. So if I can get this up here, then here's the trade down here. Right? We know a 2 most commonly goes from a 50 to a 618. So this is what we'd be looking for. So in effect, there's no trade yet. But we got some good targets up here. So we can look at that and say, okay, well we'll put the stop below the 6.5. So there's 9-1 just at the first algo target. Actually, a little over 9-1. If we're going to go up to the 100%, well, there's almost 12-1. Right? So this is exactly the kind of trade that we look for. Low risk. Right? It's invalidated quickly. If it's wrong, right? And odds are always that you're going to be wrong more than you're right. So your first assumption is, okay, where am I wrong? Well, if we take out we take out the 6.5, then I want to be out, because no longer does this look like I've got a diagonal or an impulse into my 1. So just keep that in mind, that we need this to define itself a little bit more to be sure that I've got a good 1-wave started there. If I do, then I'm looking for the 2, right? And then you're trying to get the 3rd of the 5th. Right? Does that make sense? Right? So it's always waves within waves. So if I can get one more, so that's the kind of thing to put an alarm on. So I would want to put an alarm on that high. I'd want to add an alert there. Yeah, send me a text in case I'm away from my machine, and I want to know if we break that. right? So you can see all of these things I have alarmed because I want to know, because I can't keep everything open. I mean, look how many windows I have open now, and it starts to slow your machine down. Right? You get 25, 30 tabs open, and it'll slow you down. Plus, it's hard to find things. So I just want I want an alert to go off so I know what to go look at. And why I'm looking at it. So as soon as I bring it up, I can see what's happening and how does that relate to my next move. Do I like it enough to set up for a trade? So I want to know if that low gets taken out, and I want to know also if I'm going to invalidate here. So I would put an alarm here, add an alert there if that's going to get taken out. So now I don't have to think about Litecoin. I don't have to keep it open. I've got my alarm set. I know what's happening there. If one of these is taken out, then I reevaluate. Do I have a 1? Do I have a failure? Am I going down again? Because certainly the possibility is here for this to go back down again. That has been the characteristic, for the last couple of months, right? Here's our range, right? So here's our range. So we have the possibility we just go back down and visit the low end of the range. We don't know. We just don't know. So all we can look for is probabilities. If I get a 5-wave structure here, that implies that my bullish trend is intact still, and I'm looking for that first retracement. Right? I wouldn't be a buyer here trying to scalp in to see if I can get the 4th of the 1. That's not good enough for me. I want to see that. I want to know I've got a 1, and then I want to catch the 2, right? Because then I'm going to get, there's my money-making wave is always the 3rd. All right, so hopefully that makes some sense against the dollar. Let's look at it against Bitcoin. You can see I've already got it teed up here. This is something we've been tracking amongst members in the room. So against Bitcoin, so we can see let me take this off because it's a little. Well, so first take note of how we've revisited the median line. We go to and through, then return back to it. Let me take it off just because it makes the chart a little tricky for me to show you what I'm trying to show you. So we get a 1 wave. We get a nice 3-wave subdivision. Here's our 2. We go up. Here's our impulsive 3. The 4 overlaps the 1. So I know I'm in a diagonal, which can only be in a 1 wave or an A wave. So I'm reasonably sure that I'm in a 1 wave. And just as with the dollar, now I've got a 3-wave correction underway, and I'm looking for the highest probability locations. Well, I got 2 spots. So if I'm retracing a completed 5-wave structure, I'm looking for a 2-wave. Highest probability zone for a 2-wave is between the 50 and the 618. But look here, I've got this overlap. So if I wiggle this, you see, so I'm taking the distance from the A wave, projected from the B wave, and look here, I get this nice confluence zone. That's just what we look for. I want to see that overlap. So I get pattern, price, alternate price projection, swing low to high. There's my 50. I get that confluence zone right there, exactly what I'm looking for, and I don't need to give this a whole lot of room. I mean, you could go down here below the 618 because we could go that deep, but I don't love it that much. So I want to look for I'm looking for a tight range here. So if I can get it just a front run off of that 100, knowing that it may go down and right into that little pocket, I don't need to give it a whole lot of room. If I get stopped out, not going to hurt me. Not going to hurt me if it's going to go down here. I'd rather reload it down here and look like that. Right, so I've taken a small loser. That's not going to hurt me. Now I've got better upside, and I can be tighter on the risk. So I'd rather take the loss here any day than ride it down. Then I'm taking a bigger loss when I didn't need to. So I'd rather take the small loser here. If it's going to come down and revisit the 618, well then I can re-enter again, knowing that I've got a very small amount of risk because I'm going to stop out under the 65. But my upside is actually increased. So if I'm wrong here and right here, I end up making more money, right? And I don't sweat the drawdown, if I'm doing this and it just keeps going. Why take that kind of loss? There's no reason to do it. I'd rather take the small one here and then reload below here, right? Because you just don't know. Shit happens, right? So, this thing could accelerate. You don't know. A stop doesn't get filled. Why create the possibility to get hurt? If I'm going to be wrong on this, I like the precision here. If I'm going to be wrong, I want to be out. If I'm right, then then I'm just loving it all day. So we could even open this up here. See, we've got, look at this, right to the Vegas wave. That thing is just absolutely amazing. So this is that pattern, right, though, that we've seen repeatedly. Let me put the wave on it just to make the point. So, I mean, nothing says we have to go to the 50. This is the higher probability play down here. But we've been seeing this a lot in crypto. So, this, effectively, your double bottom right into here to the Vegas wave. Nothing says that has to go down here. It could be just a front run. And then you're off for the 3. Well, if you miss it, you miss it. Maybe you catch it in the dollar. I like it down here. I'd like to see one more push down. That would be just textbook. But we may not get it. That may be it right there. So you're not going to get them all. Fortunately, you got 1,200 coins to choose from. So you don't worry about it. If it doesn't set up the way you want it, next coin, next trade. Right? As I would like to say, trades are like buses. There's always another one coming. So I like that. I'll wait for that. If I don't get it, next trade, next coin. Give me that little window. Look how gorgeous that is, right there. Boom. Don't need to take a lot of risk. There's 14 to 1. And that's just just on the algo target, right? So if we really look at this as to where that could go, if we scrunch this up and say, okay, well, where's my wave 3 target? That's way up here. So we'd look at that and we'd go, okay, well, if this is my 1 wave and I'm going to come down here for this 2, well, now minimum target to qualify it as a 3 is 100%. That's here. Where's the more likely target? The high probability 3s, the most likely target for a third is the 1618. Okay, now I'm just at the 1618. That's 27 to 1. Even you give that a little more room. Give that a little more cushion. There's 14 to 1. And you're risking from a very small relative degree of risk, right, in terms of the potential reward. If this goes 1, 2, 3, that's a home run. All right, that's probably enough on Litecoin. I'll wrap that there and be back to you one more time.